According to the latest data in our local market, as well as the latest CPI report and bond market indicators, cash buyers may be entering an ideal time to buy within the next couple of weeks. That's what I'll be going over in today's market update, so let's get started. If this is your first time to this channel and you want to know everything about living, buying, and selling in Southwest Florida, then subscribe and tap the bell for notifications so you can be the first to know about the latest data, tips, and tours to keep you ahead of the curve. I'm Rick Harrison with the Home Sold Guarantee Group at MVP Realty here in Southwest Florida, and my team and I are getting calls, emails, and texts every day from people just like you looking for help on making their move to the greater Fort Myers area, and we absolutely love it. So whether you're moving in 9 days or 90 days, give us a call, shoot us a text, or send us an email so we can help you figure out exactly what you want and where you want to be. All of our information is in the description below. So as I mentioned, we had some confirmations last week of another shift in trends pointing towards lower rates and more inventory. However, with more data coming out last week, I'm starting to see some potential issues in the future for financing buyers and a potential huge opportunity coming for cash buyers. So stick around to the end where I'll explain why that looks to be the case. But first, let's dive into this week's local market changes, starting with the southern part of Southwest Florida. So we had new listings last week. We're at 912. This week they are up slightly, up to 1,007. That's up 10%. If you remember from last week's update, we went from about 400 the previous week, new listings coming on up to the 912 range. So we had a huge increase in new listings last week, and it looks like that trend is continuing. Obviously not quite as high of a jump, but just an anecdotal evidence or story. I am starting to hear and see more sellers actually from the hurricane damage starting to list their homes as well. I think it's starting to clear up and people are starting to understand what their options are going to be. So I do think we're going to see more inventory coming on from that alone over the next couple of weeks as well. Solds went from 488 last week to 519. So that's up slightly, just up 6%. Again, that's a lagging indicator from the last 30 to 45 days. And then pendings went from 666 up to 837. That's up 30%. Again, we are seeing, if you've been paying attention to my market updates, mortgage interest rates have been declining over the last couple of weeks, or I should say last 2 weeks. And they have started to actually bring more demand from buyers back in. More buyers are starting to enter the market because of that, and because there are more listings coming on, but there are also a lot more buyers on the sidelines now because interest rates have doubled over the last year. Latest inventory breakdown went 52.92 last week for single families up to 54.33. That's an increase of 141. Condos are up 122. So we had a net gain last week of 337. That was a pretty large increase. This week we have a net gain of 263. Multifamilies are up 8 up to 157. So we're still around the same range, and then foreclosures, no change. I did want to say I did include, or I'm going to be starting to include, a new stat in here. It's total sales versus what the cash sales are. So total sales over the last 7 days, we had 327 get sold. And out of that, 202 of them, so 61%, were cash sales. So I think this is going to be a good indicator as to what the market conditions are like and who's actually making the purchases. So for those of you who are, looking for financing, you can get an idea of, are there a lot of financing buyers in the market? Or if you're considering selling, this is a pretty good indicator of what you're looking at for the types of buyers that are on the market right now. Punta Gorda up to Sarasota, the northern part. We have new listings last week, 1456 up to 1716 this week. So that's again up 17%. It's a little bit more of an increase than the southern part. Solds went from 926 to 908. That's actually down 2%. And then pendings, 1365 up to 1866. That's up 36%. That's including what we already had last week, which was already a huge increase from the previous week. So the northern part of Southwest Florida is seeing quite a bit of demand entering the market again. And I believe that's due to the really to the interest rates that are happening right now. Latest inventory breakdown. Single families were up 32 from 43.44 to 43.76, and then condos were also up 76 this week. So we had a net gain last week of 210, net gain this week of 108. Single families, really not much of a change, up 3, and then foreclosures also up 3. So both of those hovering again. Total sales were 1551 over the last 7 days, and cash sales out of that were 620. So 40% of that market is cash sales right now too. All right, interest rates as of yesterday. Interest rates went from 6.18 last week to 6.039. So they're down again this week. And we're going to take a look at the bond market real quick to see if that trend will continue. Bank rate went from 6.47 to 6.31. That's down 16 basis points. So again, that is probably why we're seeing more buyers enter the market again. All right, so over the last couple of weeks, we've been talking about the bond market and how that's a good indicator as to where the mortgage rates are heading. If you've been watching, you know that I've already used the indicators to pretty much show where market the actual interest rates were going to be heading. So it bumped its head up here on the really what became, I thought it was going to become support, but it ended up becoming resistance. So it bumped its head here, double top, brought us down to where we're at right now. If this does decrease, it's risen over the last day or two. If it does decrease, it's probably going to hit the bottom here, which will be support at the 200-day moving average, which I drew this line here. So if it does continue to decrease, it'll hit there and probably head higher. It might not actually decrease anymore because we're already starting to see in the MACD and the RSI, it is starting to shift and it's starting to head the other way again. We don't have confirmation yet, but that's where things are looking. So for buyers who are sitting on the sidelines, who are waiting for the interest rates to come down, it may be a while. This might be a decent opportunity, buying opportunity. However, obviously rates are double what they were a year ago, but it's not to say that, rates can't go back up to the 13 to 18% range like they did in the 70s and into the 80s. So we don't really know yet, but just be aware that this is what you want to be looking at, the 10-year bond and the 2-year bonds, just to watch that, or you can just keep tuning in here and I'll cover this over each week. All right, now we're going to move on to the first story that I wanted to cover, which is the Consumer Price Index. This got released last week for December. So overall, we did have a 0.1% decrease overall for CPI data, which is good news, but it's not really great news because it was such a small decrease. And the things that are actually keeping the CPI elevated right now are the most important things, which is food right now, which increased 0.3%. And then we also had shelter, which increased 0.8%, almost a full percent. So the only reason that this did decrease at all was because energy price index went down 4.5%. So over the month. So that was a huge decrease there, which is showing you how resistant food and shelter has become. With that being said, if the Fed is going to continue raising interest rates in the short term, the bond market might actually start heading higher again. And especially while we're entering this recession, if stocks continue declining, which it looks like they're going to, most people rush into the bond market, which usually builds that, increases the prices there in the bonds market. And if that happens, that's going to actually decrease the amount of demand from buyers who are financing, which is going to give cash buyers a huge opportunity because I think we're going to see inventory steadily increasing. It's not a huge increases every month, but I think we are going to still continue seeing that rise in the area. With that happening at the same time that financing buyers are leaving the market, it's going to put downward pressure on prices, but it's also going to give you a better opportunity to not have to compete with as many buyers in the market. So if you're a cash buyer, I think over the next couple of weeks, we're going to see some really good opportunities for that market shift in your favor. The second story really relates to the Florida in general, the south part of Florida, but short-term rentals are hurting South Florida residents. This really is more particularly pinpointed on Miami. However, this is the same thing that's happening over here on the East Coast as well. Demand for short-term rentals entices more real estate investors to offer them. However, that helped push rents higher for year-round residents. So this is starting to affect the residents, especially in our area where we already had a hurricane come through and that already displaced so many people. A couple of the things that were notable in this article: in this economy where more renters this year are expected to opt for roommates or move back home with parents because they can't afford rental costs by themselves, landlords would have less risk with a single steady renter for a year or more. Also, with a looming recession, demand might not be what it used to be for short-term rentals, but there will be demand for long-term rentals. The potential economic instability is encouraging us to go away from short-term rentals because less people will be working remotely and taking a vacation. So this all has to do with the upcoming recession, or the recession that we've really been in for quite a while, with the fact that if you are somebody who is looking to invest, while the profit margins are still not there, or if you already have invested, a lot of people are looking for rentals. And there's also still a huge demand for this area. People are moving from Chicago, New York, the Northeast, even, Minnesota, Wisconsin, Washington. People are moving down here. So they are looking for longer term rentals because they want to figure out what the area is like, where they want to live. And they also, a lot of them, probably like you, are hoping that the market is going to decline. So for those reasons, I think cash buyers, you got a pretty good opportunity coming up over the next couple of weeks. We're going to find out, and probably within the next week, what's going to happen with the bond market and where that interest rates are going to be going again. But I think they're going to be heading higher for at least the short term, over the next month or two, till we can really till the Fed really feels like they can get inflation under control, or the bond market starts to, pivot in the direction where they think, everything's been priced in. Right now, they don't feel like that. So the bond market is starting to rise again. Well, that's it for this week's market update. If you got value out of today's video, please hit that like button to let me know. And don't forget to subscribe so you're the first to be notified of the latest data, tips, and happenings in our market. And if you have questions, please don't hesitate to reach out. All of my contact information is in the description below. I'll see you next week, but until then, stay safe, stay positive, and more importantly, stay free.